Folks, earlier this week, I put out a daily financial news that said new home prices are crashing 8.1%, if memory serves. I did that because that's what the Crash Bros are going to tell you. I went on in that video to talk about what I believed the answer to be is that builders are building smaller homes. Lance apparently saw that video and says, Zuber, you're kind of right, but it is really an incomplete picture. So he is housing, housing, housing. I respect him. So I'm going to figure out where I am somewhere between wrong and maybe blind, need to be corrected. So Lance, educate me, my friend.
Yeah, so new home prices are very tricky to nail down. Unlike the existing home market, where you have all this great data that's public and it's like they can be made apples to apples with like the Case-Shiller repeat sales index, new home prices aren't. And even the firms that kind of track this, it's not easy. And reason being is that, there isn't like a previous sale of that home, right? And so the
Right.
products can range, right? And what we saw last year, based on my reporting that I have, is from Q2 2022 to the
Okay.
beginning of Q1 2023, there was a period of pricing adjustments from builders who were trying to meet the market. Big demand shock. They were trying to meet the market. And what happened is the Q2 2022 cohort, which is peak prices for them,
Okay.
they couldn't really cut prices too much because they had a lot of homes sold from that cohort. So that cohort was a big problem for them because if they did too many adjustments, what happened? The backlog or the cancellation rate soared. And for some of them, it did happen in terms of the cancellation rate soaring when they tried affordability adjustments. And as the different communities would sell throughout the year, if they were a new community that had no sales, that's often where they were just like, okay, we're going down 10% from our Q2 2022 cohort. Or would do 5% difference from that one, plus the net incentives like mortgage rate buydowns, money at close, all of that stuff.
Okay.
And it got to the point where by Q1 2023, that was the one where it was kind of like the best deals in terms of pricing from relative to the Q2 2022. And at that point in February is when, Rick at John Burns Real Estate Consulting came out and said, hey guys, it looks like the runway for price corrections in the new home market is over, right?
Done. I
And
remember that. Yep.
and a little before that point, and since that point, builders have been raising prices, doing fewer mortgage rate buydowns. The incentives have come down, right? And all of this varies not just based on market, not just based on community, also price tier and home type and all of that stuff. It all varies. And what we're seeing now with the data, the pricing data, is because unlike the existing home sales, which go into close much sooner after a transaction is done, these take longer, right?
Okay.
So we're now starting to see some of the trough that happened in December, January now. So
Okay.
in my opinion, existing home prices, if you look at like Freddie or Case-Shiller or these other ones, it fell 2.5, 3, 4, 5, somewhere in there from like April, May
The peak to
to
the trough.
December, right?
Right.
Now that and most of the existing home sale indexes has been erased, right? The
It's
gains
gone. Yeah.
have now eliminated the trough. On the new home side, I think based on my reporting and some of the other indexes built that are kept like proprietary, I think that new home prices fell 6 to 8%. I'm thinking DR Horton CO told me they did about 6 with all their communities, and some of those were like 15, like Austin, where they ripped the band-aid off. KB Homes told me they were kind of like 9-ish on pricing. And then now they're down to 5. And the CEO of KB Homes, they think by next year, they're going to be back to the Q2 2022 pricing peak. Now that's net effective incentives, everything like John Burns and Zelman, Ivy Zelman's company, they have net effective at like 10 or 12, right? Now, some of these net effectives was Austin was like 20. But the thing is, it didn't take us that far back because prices at the very end of 2021 to the Q2 2022 cohort were just roaring. So it's not like it's went back too far. And so I think this 8 something is too high. It's too high based on where the trough was, I think, because I think
Yeah.
it's probably 6 to 8. And some of that is what you were saying, which is the homes are starting to get smaller, although they have been getting smaller for a while. And there could also be shifts in mix where the affordability had happened and builders had an easier time selling their cheaper homes in their
Yeah,
inventory.
of course. Yeah.
So there's things happening, but at the end of the day, the biggest problem that like the real big bears out there who are spreading this information are getting wrong is that this already bottomed. This is old, right? If you go into the marketplace today and try to buy a new home, you can get incentives and stuff, and depending on where you're buying, especially on the higher end, but it's not going to be what it was 6, 8 months ago. So them saying it is crashing is, well, that's wrong. It's not is crashing now. The affordability correction
Had
happened
crashed. Yeah.
and now has rebounded off of it. And there's now, as we start to get the next 12 months of this data line, it's going to show something else. And maybe the growth up will be suppressed by some of the more smaller homes that are still getting sold. But I just think the story is a little more nuanced. And there was some correction there, but that story is over. And it is what it is. And it's, if you go, maybe builders bring back some more incentives later this year if they have to, some buy downs because rates have gotten so high. But prices for new homes rose the first 6 months of the year, that we know, and incentives came down, and there are fewer mortgage rate buy downs.
So let me kind of summarize, because I think, first off, you're right. I was wrong or incomplete, depending on how you want to look at it.
Well, I think you were right in your pushback, though. And you are right. Those points are happening too.
Yeah, I think there's this one piece that I missed, and I loved how you walked me through that. So again, homes are getting smaller, but that's not new news. I would argue I should have been more clear. I think it's the mix is making the average home even smaller. So I think I was kind of right on both of those. But the thing that I missed, and you are absolutely right, is the lag effect, right? I think what we're just reporting on is kind of like the worst of the worst, but that's over, right? That's like looking in the rear view mirror. I think that is an excellent point that I had not realized nor had even thought about. So I appreciate the reminder.
And it's just like the Case-Shiller one where we didn't. Okay, so the Case-Shiller bottom was for January, but it's lagged, right? And it didn't get reported till March. So the real world bottom was December, and the Case-Shiller one is January, but didn't get reported until March, end of March, almost into April, 2 days before April.
Yeah, exactly.
And this new home's even more because the backlogs take so long.
Oh yeah, it takes so long to come through. Yeah.
It's just a very lagged data line. And so but the builders are getting smaller on the homes, and they're going to have to continue to get smaller. And there's a squeeze there happening. Zonda put out some new data that shows the squeeze over the past 4 years. And so that, will probably have some type of impact there with the price. But the biggest issue is there's just not good indexes.
Yeah, I think there's something else that you put out and Logan replied to, or maybe it was the other way around, about new home builder inventory back to kind of 2019 levels. Do I remember that right, or did I read that?
The backlogs are shrinking. Builders work through a lot of their backlogs, and build times are improving a bit. Now there are some of the homes that they haven't started, and Logan's saying, hey, they're going to
slow roll this thing.
Yeah.
That's what I think is going to happen too.
And slow rolling it. And, I've seen a few people be like, the fact that, the housing market is much stronger than expected. And I'm not.
Oh, no question.
The market is strong. I'm saying relative to expectations this year. And so there's been some people who were like, hey, given how well the builders have done this year, do they wish they didn't cancel those land purchases and stuff last year? Because they were canceling a lot of projects. I
remember
getting very conservative. And I asked that to KB Homes CEO when we talked 2 weeks ago. He said, absolutely not. The getting conservative there, he doesn't care. because he has never had an issue finding land, is what he was
Right.
saying.
Yeah.
Which was kind of surprising because you hear about the issues. What he said he has had trouble with is offloading land that they shouldn't have bought, that
Yeah.
like for development. So, I don't think they mind too much playing conservative because,
No.
they also know there's demand out there and this is an underbuilt housing market. I don't
Yeah.
think they want too aggressive.
Yeah. The other thing I think I saw the other day, I think it was in the same daily financial news, the median purchase price of a new home is just about to go below the median price for an existing home. I think the last time that happened was like 2005 or something.
Yeah. Yeah. It's interesting. Now, there are some markets where that's been the case for a long time, I think, because the stock's just different. But yeah, that is interesting too. And a part of that probably, if it stays there over a prolonged period, it probably is starting to be some of the smaller home effect.
This
If it
mix.
if it prolongs there.
Yeah.
Yeah.
You are housing. Where can people find you?
Yeah, they can find me at News Lambert on Twitter, and they can also find me Googling Lance Lambert Fortune in Google. One thing about that existing to new home gap,
Sure.
one thing there is a lot of the construction that occurs, the new homes, are in markets that aren't at the highest expense
That's true.
part of the country. It's not the San Diegos, San Franciscos, New Yorks. It's the Charlottes, the Raleighs, the Austins, the Phoenixes, Las Vegases. So I think a piece of that could be that as well. And increasingly, it's going to be more in the Midwestern markets too.
Yep, I agree. It's about mix. It's really hard when you're housing. There's lots of data, lots of elements. If you're looking for housing, it's about your buy box. It's your area. Learn your stuff. We both enjoy looking at housing nationally, but most of you watching should be looking at your buy box and learn your buy box. Lance, take care, buddy. Thanks again.
Thanks for having me. Anything else?